I think the fact is the emerging market, tag worked for quite some time in the past, and the group as a whole generally moved in line with each other over the last 10 or 15 years, generally. I think over the last 2 years, and particularly over the last year, that's changed. And I think investors are starting to become a bit more discerning about actually selecting countries even within that emerging market space. So if you go back to the wonderfully named taper tantrum mid last year, or just into the third quarter last year, when the current governor of the Federal Reserve made this announcement that they'll start reducing quantitative easing in the United States, you saw a pretty substantial sell-off in a number of emerging markets, and India was one of them. That's where the currency collapsed, equity markets fell down, the Indian corporate bond market also saw huge foreign money being pulled out of it. What's happened subsequent and after that is that India's got its act together. And a number of other emerging markets, if you like, have got or begun to get their act together. And particularly, you could almost say there's a group of them that are the reformers. So you've got India, Mexico's instituting some reforms. Indonesia now has hopefully a more reformist prime minister. So there's a few emerging markets out there who realize that just because it was okay operating in such a way in the past, in the future, actually, we need to change to sustain what we've achieved. And India really is at the forefront of that. And so I think, again, the word, this phrase, emerging markets, this catch-all phrase, I think for the moment isn't overly relevant. Yes, when you look at the economic and political conditions in India today and compare that with Russia, all the issues going on with Russia, Central Europe, Ukraine, so and issues elsewhere. So I think the pack as such now is no longer all going in the same direction. There's quite a lot of dispersion, if you like, of performance, and both at a political level and an economic level. And I think India certainly stacks up pretty well when you compare India with other emerging markets.
I think also the demographic outlook for India is much more favourable than China. China has an ageing population, whereas India has a very strong, young, youthful population that will be coming into that kind of lower tiers. So they're going to be, buying houses, buying the white goods. So there's going to be that consumption, as well as they're educated, or the education's coming through. So they'll be kind of driving new innovation as well. So that's another kind of positive sweet spot compared to China, perhaps. It's also worth noting that Jonathan was talking about the outflows from emerging markets last year. This year, within India, we've seen into the equity market more than $14 billion going into the Indian equity market from foreigners. So that's foreign flows into India. So that's $14 billion, which is record level for this stage of the year. Interestingly, we've also seen similar levels into the Indian debt markets. So going back to how they're going to maybe be funding some of these projects, that's also another source of capital that the Indian corporates will be using. If we look back over the last 10 to 12 years, the only time when there hasn't actually been a time when the debt markets and the equity markets have been at these levels. So that's really very interesting for our India Equity Fund, but also for our India Fixed Income Fund.